Well, I'm excited to share with you a new indicator I just released on TradingView. You'll find it linked down below. It is called the RexDog Key Levels. What this does is it plots the weekly open, the daily open, and the previous vWAP levels. In the remainder of this video, I'll share just an overview of how this indicator works, why I created it, and how you can trade around it. So here's how you add this to your chart. Visit TradingView, go to Indicators, and search for RD Key Levels. And you'll see it here. It's the RD Key Levels Weekly, Daily, Previous vWAP by RexDog Actual. I did change my username on TradingView. I didn't kind of go with RexDog Actual going forward, pretty much across all social media. So add that to your chart. And what we see here, actually, I do have an indicator here, the RD RSI. That's actually a member indicator. Let's turn that off. That indicator here is just the triangles that you see here in the chart. The first thing, let's just start with what it plots. It plots the weekly open, and the weekly open is either orange or white. And it's orange if price is below it, so this is the weekly open, or it's white, like in this case, where price is above it. The other thing that it plots is the daily open. So the daily open is red or green. So obviously, or not obviously, but if price is below it, it's red. If it's above it, then it's green. Now, the other thing that this plots is, and I didn't mention this on the weekly, is that you can turn on the weekly high and the weekly low, and this is plotted as circles. The other thing that it plots, which is a high probability reaction area, is a previous day vWAP close. Now, this is anchored to the daily vWAP. The vWAP on the base settings is by daily anyways, but this is the closing price of the vWAP. And the reason why this is an additional level is because it's an additional reaction zone. And we'll get into talking about trading with this. I do share the different strategies, or the 3 different strategies that you can trade around these key levels. But let's talk about the philosophy of why these key levels are important. It's real simple. The market and trade systems use these levels to trade around. They use these levels to understand whether or not momentum or bias is holding. And the market and trade systems, notice I didn't say traders. I'm very specific about the words I use. Trade systems use these levels to decide on whether or not momentum or bias is holding. Their high probability reaction areas. And that's what we trade here. We trade reaction areas. The RexDog system is based on predicting reaction areas. We trade patterns around reaction areas. That's what we do. Just give you an example here. We're looking at a previous day vWAP. We're looking at Bitcoin, US dollar, the index on the 15-minute time frame. And just a real, just obvious example is here. Previous day vWAP. If you didn't have this charted, you'd wonder maybe why does it stop here? Now, we don't know if this is why it stopped here, but this is an area of the chart that we can use an indicator to look for a reaction, and we can trade a pattern around that reaction. We see here, it tested the vWAP. It actually tested it twice. It tested it there, and then it also tested it here. Those are 2 good scalp trades, and then this was a longer swing trade. You see here, once it gave it up, it gave up, it tested, or it created a new day open. So a new day open, went and tried to hold the day open, found failure on the close at the previous day vWAP, really tried to keep the day open, and then when it lost, it retested it again, and then when it lost both that and the day open, it eventually sold off. Now, if we were to have the RexDog indicators on here, you would see that this is probably a momentum shift, and we would be able to see that, hey, this aligned with momentum as well. Now, for those of you that are not yet members of the RexDog system, I'll share, and I shared in the description, so let's go to that. Let's go to the description. There are 3 ways to trade these key zones, these reaction zones. And I share this in here. I share just guidelines on how to do it. Number 1, the first pattern is you do an early entry at the zone, and then you really need to set very effective protective stop loss placement. There's a simple way to do that. You just develop patterns around these zones. So everything you're trading is around patterns. So just focus on developing patterns. So this could be a very effective strategy. The second pattern is you wait for confirmation. So you wait for confirmation that that level holds, and then this requires more patience. It also requires that you fully trust the chart. And that's something that I talk about often, is you need to trust the chart. If you're a chart trader, what else are you going to trust? The moon? The other thing is that the benefit of this pattern is that oftentimes with waiting for confirmation, you can have a more precise stop loss. Now, there is a bonus third pattern that I trade around these levels that I like to trade, and I call this, that's highlighted here, I call this a confirmation and bluff entry. You kind of saw this. Let's actually go to the chart and let's just talk about this briefly because this is real simple. You've got a confirmation here, and if we had the 4 charts set up on this ticker here on Bitcoin or anything, or we're using a derivative of the 4 charts set up using just time charts, we would see in this zone that there's probably a momentum shift. So we would have additional information if we're using the RexDog system. But let's just talk about just a simple pattern, which is, okay, we've got a triple test here. We got 1 test, 2 test, and 3 tests. So your first entry would be here on the double test. Maybe you took some profit down here. And then it's real simple. You enter again, calling the bluff that it's actually not going to exceed that level and close above that level. Close above that level, you get out of the trade. Close below that level, maybe you add. And then as we see here, and I can show you example after example on the long side, the short side, it doesn't matter. And it doesn't matter which one of these levels. And the thing to keep in mind with these levels is that they're zones. It's not exact. Sometimes it's exact. I mean, this looks really exact right here. Sometimes it's exact. You need to think in zones. The other thing you need to do is you need to develop patterns around price action to trade these, or don't trade with stop losses. That's an option as well. Don't trade with stop losses and learn how to trade yourself out of trades. I added a lot of extra stuff to this video that I didn't think I was going to add. Once again, you'll find this indicator. It's free on TradingView. You can add it to your charts. Go there, leave a comment if you have questions, or definitely like it or boost it, whatever you can do on TradingView. Subscribe here on YouTube. If you're interested in the best trading system on the planet, you'll want to visit the website link below or join Discord, send me a DM and ask how to get started. Look forward to seeing you in the next video.